Hey guys, Boris. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for February 6th to February 10th, 2017. It's been a very strong week for anti-dollar trades. And this week we're really coming up to some major cruxes in the euro, in the yen, and even in the pound on its own story. So it should be very interesting to trade because we're coming up with some very key pivots for us to take a look at. Let's take a look at the support and the resistance levels before we get to the charts. And I'll show you exactly what I mean. So on the euro side, the support comes in now at 107, and the big resistance is really at the 109 level. We have come up against the 108 quite a lot of times. We break through to that, it really opens up a run almost to 110s, as you can see on the charts. Dollar yen, a completely different story. The breakdown in the dollar really continued very strongly this week. And even though we haven't fully broken down, because this 112 level is the key level to hold, we have certainly given up the 115 resistance point, and that's going to be the big climb up for dollar yen if it can come up there. Given the fact that we've had relatively weak NFPs as far as wages go, which basically puts the whole March Fed rate hike very much in doubt, that's the pressure on the dollar. That's the reason why dollar yen is rolling over. And of course, cable has its own story this week. They're going to vote on Article 50. They're going to make Brexit pretty much a done deal, I think, in Parliament. And the market, I think, is finally starting to realize that maybe that it's not as benign as they initially thought. And the reason why is because UK data, which has been quite good since Brexit was announced, and therefore provided a nice amount of support for the pound, has started to turn sour. We've basically started to miss our numbers. And maybe the market is coming to the conclusion that UK economic expansion post-Brexit, when they had very, very low pound and still full access to the single market, has peaked. And now the European companies are almost certainly going to begin to abandon UK as a base of operations. That's going to begin to weigh on the economy much more than the market thinks. Cable, to me, is a relative weakness story as it went out last week, and it certainly starts the week as a relative weakness story. It's very much worth watching. So let's just take a look at the charts here and see how everything sets up. So starting first with the euro, you can really see that this 108 area is very key resistance for the pair. Of course, 108 was the big flip back point from the ECB meeting all the way out in December. And that's been the sort of slow and steady build that where we've been going in the euro all the way from that time. We bottomed out at 104 and been building a strong, steady uptrend for the last couple of weeks. We've been talking about that for really since the beginning of the year. But what's happening now is that we're bumping our heads very much against this 108 level. What's encouraging for euro bulls is that the pullbacks have been very shallow. We haven't even touched the 107 really strongly over the last couple of days. Basically, we sort of come back down to the low 107s. We haven't really breached down into the 106s. I think essentially you have to assume euro is in an uptrend unless the 106 gets broken. That's the key level. That level gets broken, then this is essentially a topping formation, and we've lost a lot of momentum. But until and unless that's done, you basically give the benefit of doubt to the long side. Any kind of pullback here looks to be a buy. And a break through the 108s, like a convincing break, let's say 108.35, 108.45 on the highs on a closing basis, really puts the whole play towards 110 in scope. Now, technically, the really big overhead here is, of course, the 108.72 level. It's basically about 108.72. But generally, I think once it clears 108.50, very unlikely that it's just going to double top at that particular point. Still worth watching, though, of course. Still need to be wary. But from here to there, quite a lot of upside potential. And I still feel like the euro could motivate that move higher, especially if the dollar strength continues to weaken as the week continues. So euro looks to be a buy on the dips, a buy on the breakouts, just simply buy at this point, especially given against the background of very little data coming up next week and negative dollar data this week as we closed out the week. And of course, the negative dollar data really can be seen very well in the dollar yen. Failure, multiple time failure at the 115. We couldn't break it here. We couldn't break it here, and we've been distributing ever since in this area here. Even today, the words of the FOMC member just could not hold us back towards the 113. We came right back towards the 1250. Now, the only encouraging thing, let's just zoom in on this thing. The only encouraging thing for dollar bulls is that this 1200 level has held continuously, and it's been holding really If you think about this, where is this? What date is this? Basically since the middle of January. But that's precisely why this is becoming such a very interesting and very important area to look at next week. Because I think if we bust through the 112s, it really opens up the spigot all the way down towards the 110 support, the much more meaningful support there. So this is a very, very important look this week. The 1200 level is going to be key. A break below there, even into the 1170s, really suggests a much steeper sell-off, and certainly a much more negative posture for dollar yen as we go forward. The only thing that really turns this thing around positively is a convincing break above the 115s. Up until then, you sort of have to assume that whatever rallies we have here is going to be capped by the 115, and therefore it's a sell the rally mode. The dollar looks to me, looking at the charts, as the weak play here, pretty much all across the board. The one exception to this rule is the pound, which is its own story. And of course, because with Brexit coming up now in the UK Parliament, being driven very much by its own dynamics. You can see cable really performing much worse than any of the other majors against the dollar, losing its altitude at the 127 level, essentially making a lower double top here so far. Does find support at 24, but this 24 to me is vital. If they break the 24s, it really opens up the path all the way for a full unwind to 122, maybe even down to 120. Hard to say. I mean, the UK economy is not in horrible shape by any means, but the fact that it's kind of turned down is making people begin to question whether UK can survive Brexit unscathed, and I very much doubt that myself. So cable looks like a relative weakness play. The one thing that would change my mind is if we retake the 26s, because at this point this 26 level is a key hold. If we can come back on a closing base to retake 26s, the whole structure of cable would look a lot better, and then it would have a potential to go back up towards 128. So it's really relative weakness trade until 26, 25 or so gets taken out. At that point, you kind of have to change your tune. But for now, cable certainly looks like a sell on any kind of a rally. This is Boris Schlossberg wishing you guys the best luck, the best of trading for weekly technicals.